Hello, hello. I hope everything's fine. Um, yeah, today has been extremely busy day, extremely eventful day. Obviously, like we talked on Sunday, we have an ECB, and which proved to be as always a roller coaster. Not much moving on the press conference type. But much more when Draghi started to speak, which also coincided with a bunch of data coming from the US. So I think that we covered the ECB and Euro earlier today. We were not really exposed to any Euro moves. I was not a fan of having either a long or short going into the ECB and Draghi, and that actually proved to be a very good decision since Euro moved, as you saw, first up and then it fell almost 100 pips after the press conference, and currently it's at the lows of the day mostly. So let's discuss a couple of charts. I have 3 charts to share with you and to discuss some techniques that usually I use and that are part of my toolkit. So we have a USD CAD. I sent you actually a note on the USD CAD. So we have a USD CAD, we have a pound dollar, and we have dollar yen. But first I want to go to the dollar CAD. As you know, this morning I sent you a note or a signal about the dollar CAD. So I hope you received it. It also has a short analysis. I hope also you entered the trade, because currently we are around 30 pips up. I think we are going towards our target. It may happen overnight, but it also may happen tomorrow during Friday European or US session. So what we had in the dollar CAD, just to speak a little bit about my rationale. So obviously we had a big move from the downside from the February, and this happened more or less with all US dollar pairs, because dollar is obviously moving higher extremely fast and taking no prisoners, and you really don't have time to enter USD longs, because it almost offered no correction in this move starting from February. As you can see, if you accept this first leg, then it literally went almost vertically with some minor corrections from 125 to 130, so 500 pips move. Then we also discussed this last week. I think a lot of people that I follow, that I also interact with, recognized this head and shoulders pattern. Everyone was waiting for the neckline to break, and we had this. So this is like left shoulder, right shoulder, head. This was neckline, and of course the head and shoulders, the biggest trap that head and shoulders pattern possess is that people start entering the pattern because they see shoulder, they see head before the neckline is broken, and this was not really good for trading, because you can see here actually that we broke through the neckline, and then we went actually up again above the neckline. This was not very good, and I can imagine that a lot of people got stopped out here. But then we continue to go lower, which I think proved again to be a biased trade. So obviously there was one direction that was really stronger, and eventually the price kept being pushed lower. And then we literally, you see, we have another touch from the neckline, and then from 120, 28.20, we went almost vertically to 125.50, So almost 400 pips move. And if you can see, so we have a head and shoulders pattern, and we also talked on how we measure the take profit in head and shoulder pattern. So we take a trend line from the low to the middle of the neckline, and then when it breaks the neckline, we copy paste the same trend line, and we have a measured take profit target, which in this particular case it's around 125, and you can see we came, I think, 10 pips off target. And of course, as with every pattern, especially these patterns when we are talking about 300-400 pips move, it's always very advisable that you take your profits or some of the profits off table 15-20 pips before the target. Why? Well, because as I said, a lot of people was playing this on a short side, and then what happens here is that as I said, a lot of traders start getting out earlier than for example 125, because it's a big, like a round figure, and then there are some people who want to buy it around 125, and then obviously you have a lot of people who they will not buy at 25.0, but they will buy it at 25.5, 25.10, and this is why you will see many of these situations when you have price getting close to the big target, and then simply 15-20 pips before it reaches the target, it bounces and it goes off in another direction. And this is actually what happened here. You see we bounced off immediately quite hard, almost 150 pips, and then another leg higher in the dollar, and I think this leg higher has more room there's room for more gains due to very few important reasons, but the problem, as I said at the start of this video, is simply the people who are not inside in this trade, in this US dollar bull trade. There is very few opportunities to get inside this trade, so you have to be really focused, and when you see one, to act quickly. So I actually sent you this morning, I think it was around 11 European time, I sent you a note saying that, or a signal saying that we should enter the dollar cat trade. Why? We completed the head and shoulders pattern. I explained this now. We went above the 100 MA very quickly. We didn't even come back to retest it. We went again above the 200 and the neckline, which was previous support, now it was a resistance. And as you can see here, what happened is we moved higher above both MA, neckline, now a support, and 50% of this big move down. So it was a triple confluence of resistance, and we moved higher, which means that there is a really strong bias towards higher levels. And what usually happens is we came back to retest it, and I was actually waiting for confirmation this morning, because last night we closed at highs. So what happened this morning and during the second part of the Asian session and first part of the European session, we moved back, we touched the 200 MA. We also, here is the support, the previous support, the previous resistance, now support, and then we immediately bounced 20 or 30 pips, which means that a lot of people and investors, actually real money, big money, were waiting for a retest, for a good entry level to enter into here and look for higher targets. Obviously, how we trade is we wait for a confirmation, and we received a confirmation with a strong bounce from the desired area. Because what if we just started like trading within range or sitting at this trend line and at this MA, then more or less doing this, going sideways, that's not a good sign when you're looking for a retest. So what happened is that actually when we closed H4 chart, I'm sorry, time frame, we actually started moving higher, and I sent out a note saying that I explained what I just explained to you here, and this is obviously H1 chart. You can see also here that on the hourly chart we had a 100 MA on hourly chart providing additional support, and then here you can see this big green candle. There was a strong interest from buyers to buy the dollar CAD at this level. So I'm sorry, so you can see here that our entry level was 128.45, which is 30 pips above the support, because we were waiting for the confirmation in the candlestick. And then we are aiming for another tag of the 129.09 bull bear line. This is the bull bear line, which is extremely important in the dollar CAD. More or less, we already again talked about it. What is bull bear line? Anything below this blue horizontal line, everything below we are more or less in bearish territory, everything above we are in bullish territory. Why? Look at the number of tags here. Here is one. Second one, again what we talked, we come close, we didn't touch it, but we immediately went lower, because a lot of people were waiting here to short the dollar CAD. Then we went again up, we touched this 129.10, and again went lower, or here went 129.20, it depends which high are you looking at, but more or less 29.10, 29.20 zone. And then obviously we had this big move down. Here you can see more tags of this line, and then what I simply think that is going to happen, we moved above the support, like we said, the resistance now support. We came back to find more buyers, as I explained everything here, and more or less we're now looking for a tag of this line at 29.09, which means the most important part of every trade is of course good R&R, good risk and reward. And here in this particular case we are risking 40 pips to make 60 pips, which means that R&R stands at 1.5 to 1, which is very good. Obviously today we had a bunch of data coming from states, and of course the main event today was ECB, but bunch of very positive data from the US, and the most important data coming today from the US was of course durable goods, which beat the expectation, the key one, while the ex-transportation obviously went below the expectations. We also had beat on good trades balance, wholesale inventories, and a big beat on initial jobless claims. Usually initial jobless claims, they are like couple of thousands go around the expectations, but here we went 21,000 below the expectation, which was a beat. So that's also helped the dollar Canadian to move higher. But actually it had to wait for Draghi to finish, and then when dollar started retreating against euro, when dollar started advancing against euro, then also dollar started advancing against other major currencies, and then this is actually what happened. So we are in play, we are in validation level, stays where it is. We are looking for 129.09 or 129.10, that's 60 pips. We are already 35 pips up, so I think tomorrow we should be able to reach our target. Okay, I hope I was clear here. Let me show you two more charts, which are two different charts. So this is the pound dollar. We also talked about this in our weekly preview on Sunday. Which means that more or less we had this big this is a big trend line, it's a multi-year trend line that comes here right now. It comes, you can see here, around 137.50 maybe, and then we had another trend line that connected many touches. As always, pound is not really neat and tidy, but it goes through and then comes back. But you can connect, I say, 5-6 touches more or less, and then we had a break of this line, and a lot of people were buying the pound here. A lot of people were buying the pound here at 78.6 plus the trend line plus the 200 at a 4 hours chart. So it was a confluence, and it literally went through the support. It went down, and now it's more or less trading for a day around 139. What we are looking here, I still believe that the pound is a good mid to long term buy. Due to many reasons, I think it's one of the more bullish currencies currently. We of course cover this extensively in the weekly preview, but more or less what I'm looking here, I'm looking for an additional leg down, additional retreat to at least 127 extension of this move. So we are talking this move. This is a support, and then we are talking about 127 here at least. Or if we continue down, which is also very, very possible, then we are talking about move around 138. And I advise you that I'll obviously send out a note, but if we come here, if we come around 138, then I think, honestly, as I said, I think it's a buy, so you should be buying here. But again, as I said, this is mid to long term, and this would mean retreat to 138, and then we will obviously be talking about additional layer of support at 137.10, which is 161.8 extension plus this horizontal resistance here. So my invalidation level will be 136.90, for example. So we'll be risking around 120 pips, but then we are looking for either a retest of this inside line of the trend line, inside part of the trend line, or of the big horizontal resistance, which is more or less like a bull bear line here in pound at 143.50. So we are really talking here about a potential big move in the pound. Or if you want to play it more safe, you can just look to take some profits around 120 and 200 MA, which at that time, yeah, maybe around 141. So but it's still it's a 300 pips move. So unlike the dollar CAD, which is more like an intraday, intraweek trade, we could be waiting here for a week or two to or even more to complete. So okay, and let me just move quickly to the chart number 3. It's been a very, very long day, as you know. Yeah, here we have a dollar yen. We already talked about the bullish Gartley pattern. It was a very nice pattern. So we had AB retraced almost 61%, which is ideal retracement of AB. Then we went to C, again very close to 61%, which is also very good. And then in Gartley, D is usually and perfectly between 127 and 168 extensions. So somewhere in between, you will see a bottom in a bullish Gartley, of course, or a top in a bearish Gartley. And then what we saw here is we saw a good reaction from this level. And then if you obviously want to buy it here, you buy it at where you identify the low from the candlestick formation. You put your stops below this target. So let's say 104. You cannot buy obviously at 104.60 because you don't know if that's a bottom, but for you ideally you will be buying here at 101, close to 105, and then you look for a test of this inside part of the trend line. And again, we are talking here about 350 pips move, which happened very quickly. And I think even the biggest optimists in dollar yen were not really convinced that it's going to happen so quickly. So yeah, but it happened. And now what we have, if we have the dollar yen that poked are above today this huge big trend line dollar yen. So this is actually Gartley, but the blue line goes way back. It's a multi-year trend line support that was breached here, and now we're going back above it, and we're also back above. Don't forget, it's a daily chart. This is a daily chart, so we're above 100 daily moving average, and we will be most probably attacking 200 day moving average at 110.20 around. And then what I think is a scenario, is one of the potential scenario, but we'll have to follow this closely, is we're gonna go and tag it. Also 110 is a big round number. We're gonna come back, touch the trend line, find more buyers. We're gonna go again and to another level of resistance, which comes at 111, which is a 61.8 retracement of the CD move. And then we may continue lower again to the trend line and then continue, or what can happen here is we return first time and then we go immediately continue to 112 to the big again trend line on the higher side now. So it's some kind of a triangle. The dollar yen was in some kind of a triangle. It went outside and now it's coming back inside. So what is important here, what's very specific to dollar yen, if you look historically, the dollar yen has these moves when it starts moving in one direction, and it's absolutely relentless. It doesn't stop. It only stops and then sometimes, and then it's not like other pairs that make a correction actually, but what the dollar yen does, it's only consolidates and goes sideways. So it's not a correction, you cannot buy it. For example here, okay, this is a big move, but still, look, you have green candle after green candle, and this is not a correction. Look, this is a consolidation at the highs, continues higher, again one small red candle, consolidation continues, and only here you can see a minor correction. But if you look at the correction of this huge leg, we are talking about 1,000 pips. We are talking about correction of 200 pips. So it's not even a correction, it's more consolidation until we go all the way to 180. And this is always a drastic move, but this is what the dollar yen does very often. It goes straight up without retracing like other pairs like 38, 50, 61. Very rarely. It just goes, you see here, goes up, and then it's going to probably here stays a bit, wait a bit, then continue up until almost shakes off all sellers and reaches its target, which I think, in my opinion, is the upper side of this triangle around 112. So okay, thank you very much. I hope I covered everything. I hope that you are in trade, you are in dollar CAD trade, but also what is more important than if you are in dollar CAD trade is that you get my rationale and my logic when entering trades, both fundamental side and more importantly technical side of trade, that you always have a good risk management, which is absolutely by far the most important part of the trading. And when we are at risk management, obviously here, if you look into, I will not advise selling the strength here, but I would strongly advise if you retrace here, you buy against this trend line and your stop is somewhere below, or even here, if we now come back to retest the trend line, because currently we're closing on a daily above it, then you can buy it and then again play it against the trend line and have a stop loss. It's a very good trade because you know where the exit doors are. And if you remember, my biggest advice about the trading is, whenever you're in a trade, always look where your exit doors are, because it's easy to find where to take money, where to take profit, but I think a lot of people are struggling to identify their stop loss and are changing, modifying, editing, and that's usually those people are usually out of business very quickly. So if you're looking to buy it, then I advise buying against this trend line. If you look to sell, then sell it against the 200 daily moving average. Okay, questions, please let me know via email, and then I can answer to you either in written form, or I can do another short video. Thank you very much, have a nice weekend, and looking forward to another trading week. See you.